Morning number. Morning. Just sorting the stream out. Okay, everything seems to be good. Let's begin. Is ICT still going? I think it's still going. He was going real wild today. This ain't Wyckoff. Okay, daily chart. I gave this sell side liquidity pool early in the morning, this Friday low that has been reached. Now we're trading within this wick. Now this is the wick that I'm grading because it's the longest one. It's got the lower low and it's got the higher high. So you want to grade this with these fib levels. And that's going to help you determine support and resistance. When you transpose it onto your 1 minute chart, we'll get some narrative of this. We've already done the majority of that move early on, so I don't have huge expectations because I'm very neutral right now. My daily objective has already been met. So the market hasn't even opened, and we've already traded all the way down lower into this low. So in terms of what I'm expecting for the morning, it's very minimal. I don't have any huge expectations and I don't have a bias. I can't give you a level and say we're going to trade into this. We can maybe see TGIF because we've already got a sell side objective tagged, but really I'm just going to sit and wait. Four-hour chart is more of the same. We've left all these highs alone and we've traded down to this low. And we've got this one that we may draw towards, and then we've also got the Trump New Week opening gap level. This is where I would want to see us draw towards next, this entire liquidity void. That's what I want to see. 24,820. 24,820. Oh, we'll go low time frame. Hourly chart, we've got an inefficiency here and here, but with the market open, I don't think we'll need to trade all the way back into those. Okay, so this is where we'll go into a bit more detail. New opening gap, we trade above the new opening gap, we consolidate for a lot of Asia, then we get a large expansion move, retraces in between Asia and London. London trades a lot lower, and then after London, in the London lunch hour, we get massive moves lower before the pre-market range even begins. So there wasn't a lot of trading opportunity today if you weren't here at the charts before 7 o'clock. If you're here after 7 o'clock, like all the regular people, then you have to sit on your hands and just chill. We've got some highs, got this high and this high, got these highs, but I'm not looking for those as objectives. I'm not saying they can't be tagged, because they may be tagged, but this is my objective. $25,156. Okay, we're going to have a very large opening range gap. Once again. As always, like the stream. Like the... There we go. Smiley face. Smile. And pre-market range, I'm not really looking at the pre-market highs and lows because they're not really that relevant, but we do have this as a pre-market high. The reason I'm not looking at it through the lens of a pre-market high and low, I am looking at the level, this high and this high, as I mentioned, but I'm not considering it like a pre-market range because the majority of the range was unfolded in that London lunch hour. So if anything, uh, based on like a dealing range, if you're going to use a dealing range, you'd want to use like this, like that, and that gives you some nicer projections. And now we wait for 8 minutes. Ooh, so we just hit a nice take profit. Let's go through the trade that Sui took. Nine AM, relatively equal highs. Because 9 AM is an opening range. Trades down, displaces into this fair value gap. Stays in the upper half. That's strength. Falls short of this order block, but it does reach the wick. This is actually mitigation block. And the displacement creates liquidity at this high because anyone who's selling, their stop losses are going to this high, to this high, to this high. You could target that as well because it's 8 AM's opening range combined with 9 AM's opening range relatively equal highs. And then very easy bread and butter. Very nice, very easy bread and butter setup. That's what the pre-market model is. It's bread and butter. I suppose we could use this as a dealing range. We could see this swept and then see it trade higher. You can see use the order blocks to trade into this high, to this high. Mini market maker model. Consolidation. Distributes, small money reversal. Displaces higher, low risk buy, low risk buy. Slightly short of this high, but I would expect it to rally a bit more above, back into the high. It's going to be a very mundane 5 minutes until market open. these wick levels, I want to see us trade below this at 0.75, and then treat that as a resistance. Trade below the pre-market low, find some kind of resistance down here, trade below the 0.5, find some kind of resistance or displace through it, and then eventually trade into that liquidity void. This new week opening gap was from when Trump announced those China tariffs, and then we closed for the day. And on Monday, he's like, "Oh, actually, we're not going to do the tariffs," and then it opened back higher, 352 points. But the void is this. Now it started off up here because we gapped. There's no trading at all in this area. It trades back down into it. So this entire orange shaded hue, there is no delivery of any trading in this, this area. That's why I'm targeting it for today. We've already reached our daily objective, which was today the sell side liquidity pool. This one. So I'm keeping expectations relatively low for the morning session. TGIF bullish now. Maybe, but I think the NLOG's the more obvious draw, and then TGIF after that. You could be right though. You could just TGIF from here at market open. One minute to go. Wow, look at that random level. So random. Interesting. Okay, here is our regular trading hours open. Okay, if it leaves this wick, sell this into the pre-market low. If, yeah, good sell. Keep this gap in mind. If that gets inverted, it's real nice. I would have preferred this took out this high instead, but it's enough here. It is enough, and because it's an S&T, it's fine. The reason for that is because it's weak after it leaves the wick in the opening range like that, then it wicks away. But you have to have a reason to be going lower. If you don't have a reason to go lower, then just because it wicks into the opening range doesn't mean it's going to go lower. Okay, inversion. There's that. 932 pre-market low is taken out. And I want to see it trade all the way down into the new week opening gap from the 12th of October. Well, it's 13th because you have to use the day following the open, not the date of the open. Anybody get the sell? And it's so depressing in England today. Just grey skies, constant rain all morning. Dreadful. This is the same setup, by the way, that we had yesterday. But this one's better because it has an S&T. S&T with ES it's always going to be the better S&T. S&T with YM, I couldn't care less. With ES, that's strong. Okay, you want to see if this gap holds up, because this is the first presented gap, and it's displacement through the pre-market low. So it's significant because it's tethered to that low. It's the gap that traded through it. If this becomes an inversion, then we could probably target maybe this high, and maybe these highs. Hello, Ivan. Morning, brother. We'll see how strong this is, and if it's showing strength like that, then I would ignore the NWOG for now, and maybe go for it later. Look at the short-term highs. Yeah, so I would ignore this NWOG for the time being, and then come back to it, depending on the strength shown, because this could trade into these highs. The SMT is a protected high, yes, but when it takes out the opposite end of the range, which is its pre-market low, then it's not a protected high, because this is only a protected high as long as it's bearish. It takes out the low, and then it's going to flip from sell program to buy program. In that case, this from a protected high in the bearish stance, that would be correct. When you flip to bullish, it's no longer protected. It's just relatively equal. So you can go this high. 1, 2, 3, 4, 5, 6. Just like that. However, on the daily chart, is that an SMT with ES and YM, or it's just a delay? Daily chart with ES and YM. I don't really use YM for SMT, to be honest. Sometimes I use it for divergence, but I don't really use it for SMT. No, there's no SMT with ES and YM. It would be with ES and then Q. To be honest, because you've got that SMT, could look for TGIF now. Because if it's ignoring the gap, and it's a daily SMT, what's next on the agenda? Yeah, let's put our TGIF levels on. So that's Friday. And we'll make them purple. So this is a 20% retracement on the weekly range, which is aligned with consequent encroachment of the opening range gap. That's a potential target. Here's 30%, 0.3, here's 40%. I'm never ambitious with my TGIF setups. I only ever look for 20%. I never go for 40, unless it's very, very strong. Okay, this is an inversion, plus we're breaking away. I promised to talk about buying strength, or not buying strength, strength and weakness today. When you're leaving breakaway gaps, that's strength, especially like if you're trading higher, and say you have an S&T, and you have a reason to go higher, plus you're leaving breakaway gaps, that's strength. It's strong when it's doing that. It's indicative of it wanting to hunt a higher time frame or the opposite end of the range's liquidity pool. So from here you can go to 15-minute chart and look at, okay, what do we have? We have these SIBIs, got these highs, but I'd probably just focus on the pre-market high for now, and then I'd extend it up to the 20% retracement level. What's the breakaway gap aligned with? 0.75 on the daily discount wick that we're looking at. What does that do? That supercharges it. That's even stronger now. So this daily wick level that we have over here, Friday the 17th of October's discount wick, the one that I told you to grade this morning, it doesn't look like it's that significant on the daily chart. That's why you transpose it onto the 1-minute chart and you see, okay, what's the significance here? It's not just using it as wanting to see it bounce off 0.75. That's not what we're using it for. We're using it to see PD arrays that are trading through it. You want to see displacement above. Any PD array that's aligned with this quadrant, if it's going to be bullish and it's trading higher and there's a PD array there, you want to see it left open. And that's confirmation that we are strong and we are more likely to trade higher, faster, and with more magnitude. I mean, this pre-market high is just very ripe for the taking. We've also got these highs, this high, like anything above here is very low resistance because it's a very thin run lower. It's thin, like there's no deep retracement where it goes like that. It's one-sidedly lower. So a lot of this price range is inefficient. And if it's inefficient to the downside, you want to see it trade through it with relatively ease. It should be nice and smooth, nice and quick. Because if it was a balanced price range like this consolidation, yes, we have the claim that there's relatively good highs there, but say there weren't, and it's like this, it's all balanced because there's no inefficiencies. In that case, it's high resistance, but because it's trading down real nice, real smooth, it's easier for it to trade above this and for it to trade all the way through and overlap this range. You want to see happen in a similar amount of time. So when we trade lower like this, say that's 20 candlesticks, you want to see whenever we eventually start to overlap this range, the sign of institutional order flow is when we're overlapping it in a similar amount of candles. So if we're doing that in 15, 25, 30 candles, that's a similar amount, and that would be indicative of institutional order flow. Okay, we've taken out the pre-market high, fallen short of the next target. Retracement down. Yeah. Yo, Sui, I saw that pre-market model trade. Nice. Amazing. You're crushing it. Did you execute on it, or was it like a tape read? If you don't mind. Either way, like it was a very good move. It's a real trade, nice. Making money left, right, and center. It seems small, but we're actually in a very large handle range. So if you're going to put positions on, double check the size that you're going in with. Just everyone, because if you were trading with 5 contracts, in London when it was a little bit smaller range, and you leave that on accidentally, which happens to anybody, you might realize that your stop was actually a lot larger than you wanted to be. So just double check your position sizes. Felt confident enough after watching the first section of the pre-market model and some backtesting last night when I was too excited to sleep. Hey, data collection. Well done, man. It's a very simple model. It's not earth-shatteringly difficult. Opening range, relatively good highs, reversal pattern, trade into the reversal pattern. And, you can align it with stuff like a market maker model. You can use opening prices, you can use first presentation fair value gaps of each hour. You can grade the opening range. There's a lot that I haven't taught on it yet. I was just waiting a couple of months to let everyone get familiar with the model first. Like there's a video in that series that's, if you try click on it, it's blank. It's titled Unknown Macro. That's not been uploaded yet because no one's going to understand it until they've actually learnt the rest of, or they've got the experience trading the model. What's your overall bias per day? Do you think we'll go higher, or is it just a manipulation? Well, initially we were looking at the pre-market low and the NWOG, and then we reversed the first percent fair value gap, and we've got the consequent encroachment of the opening range plus TGIF 20% retracement level up at 24,954. So I'm looking for somewhere around this area, like this, somewhere here. Oh, we called that move lower and then higher, so. Okay, this is a propulsion block, because we've got order block. And then we've got an order block within an order block. That makes it propulsion, and you don't want to see any closures beyond the midpoint. So, whoops. Very algorithmic here, because we trail lower, but then we close all the way back up to the top. Very nice. I'm going to start keeping the chart a lot neater, less PD arrays, like without the significant ones outlined, but I'm not going to look at every single individual one like I have been. I think it's a lot easier for people to digest with took sell side, found support of this level, manipulate the pre-market low. This is a 3 drives, trades into relatively highs, trades into pre-market high, TGIF level, etc. It's a lot easier to digest. We're getting very close to the next target. Opening range gaps, consequent encroachment. ES is doing a very similar thing, and YM is irrelevant. YM's just annoying nowadays. I don't like YM. This is very strong, but you're not getting any down close candles. It's just up close. It's a nice end to a difficult week. I've had no news at all. Bank holiday. But then today's pretty nice and volatile. Strong moves. Algorithmic. And the government's opening back up apparently, so. Okay, this may be the first down close candle. Yeah. You want to see this provide support. So anytime we trade above this, maybe the next candle will be a down close. Any down close candles in a bullish price run, they should be acting as support. So essentially, there should be bullish order blocks. When we trade above this, literally that would be a support and resistance level that you can use because it's an institutional candle. It's an order block. And then if you have price runs above it, or sorry, targets above it, and then in the price run we have breakaway gaps and other things that indicate strength, that would be sufficient to trade off of or deliver it higher. just licked into that Fair Value gap by like how much? 859.75. It does not. It does. One handle. So you want to see this strong move higher. Very nice on the 2-minute chart. Very nice. Okay, so it changed its their delivery. That's another strong entry point. Down close candles should support higher prices. So it's a bullish order block essentially. And there is consequent encroachment of the opening range gap. Quick morning. Really quick morning. By the way, that's not to say it can't keep trading higher. It can. There's still plenty of profit objectives. But if it was me, I'd have something coming off here. Just something. Auto filled 122 handles. Nice. Hell yes. Sui, my student. GG. GG's. Heavy is our second busy after 9:30, a breakaway gap 2. Yeah. Yep. They're both breakaway gaps. That'll be a breakaway gap. It's just for the sake of neatness. I'm not keeping all this stuff on now. Call favorite student. Oh, you're on. Okay, no problem. Oh wow, there's a lot of favorite students. There's a lot. Neo's trading live and he's doing pretty well. A lot of people passing their accounts and doing well on their simulation funded, so really happy to hear it. Even though I sound very deflated, I'm just under the weather today because it's just a terrible day. But we can always come to the Nasdaq and have a nice day. You see this? Do it. Do it right now. So we called the movement to the pre-market low because of the wick from the opening range gap and it taking out the short-term low with the S&T on ES. trades down into this. And I said, I want to see if it's going to show us weakness and trade into the NWOG, but then immediately after it inverts the first presentation fair value gap. So then that went out the window, and then we said, okay, if it's strong, go into these highs, pre-market high, these highs, opening range gap, consequent encroachment, TGIF level, and everything delivered perfectly. Lovely stuff. Okay, now you could use measuring gaps and try to measure the range. I don't think we need to do that. We could get a full gap closure today. That would be insane. Insane cap off. Because it's also aligned with some very nice highs. Especially if PM is a continuation. But if you haven't already, take something off because you're up, hundreds of handles. Don't take at least something off. Look at this random level. Look at this random level. Oh, how random. Not a bad morning. Everybody balling in the morning. ES is yet to give us consequent encroachment fill on its regular trading hours gap, but it's fine. It's still really strong. Let's just say opening range gap, opening range. Same thing, more or less. There's not a lot more for me to do commentary on, so might be a little bit quiet for a while. If you can see this become an area of support, the consequent encroachment level, then we want to see where the candles close first. How do you measure the TGIF from where to where? Okay, so you go from the high of the week. You can literally do this on your weekly chart. If you go from the high of the week and you measure from Sunday's opening to is Monday, isn't it? Did I do the right week? I did the wrong week. Stupid. Okay, well, technically it still applies because it's a retracement on this entire move, so the Danko's, sorry, the sell side delivery, I measured from this high to this high. I basically measured the wrong week. But even if you're using the current week, both are still valid. It's like dealing ranges. You can have retracements on dealing ranges when you refine them and when you extend them. So still technically correct. But you go from the high of the current week to the low of the current week, and then you look for a 20%, 30%, or 40% retracement on that, the weekly range. So what you're doing when you're putting this fib on, this is a 4-hour chart, and I'm measuring from the high of the week to the low of the week, and then this 20%, 30%, 40%, this is just an expectation of how far it may retrace. Now, you can apply that concept fractally. You can do that on each day. You can do that on each session. You can do that on each hour. It's a power of 3 concept. It works with any candlestick, any range. It doesn't work on inefficiencies and stuff, so don't try it there. But yeah, fractally, that's a very strong concept. You can get a lot of trade opportunities just by identifying where the low of the day is formed and then looking for a 20% retracement on that any day, not just on Friday TGIF, but any day. Because TGIF is the last 20% of the weekly range. It's a Friday. And Friday, if you're familiar with Power 3 concepts, it's open, high, low, and then close. Between that low and the close it's trading down from the low up into the close. So that is a retracement on the down candle. And that's all the TGIF is, but on the weekly candle. You can apply that to a daily candle, a 4-hour candle, an hourly candle, a 15-minute candle, a 1-minute candle, although I wouldn't recommend that. Yeah. I know someone, and the only thing he ever trades is TGIF. That's all he does. I didn't teach him or anything, I just know him. Thank you, no problem. Very minuscule but present volume imbalance on both sides of this candle. That makes it a suspension block. So we're looking at a 5-minute suspension block. Plus we've got the mitigation block. You can use the body, you can use the wick. But you want to see if it has enough fuel to continue this price run, or if it's going to want to consolidate for a little bit, maybe get a bit of a deeper retracement and then keep expanding higher, because it has met profit objectives where it's fine now for it to stop. Like, it could completely stop, completely reverse, and you can't complain because it's already met its, the minimum that it needs to go to for an up move. So now, if you're still in a position, it's about waiting to see if there's any more left in the tank for it to run higher. Just tag to the low of the suspension block. Because this is mitigation, it can temporarily act as a draw on liquidity. So seeing it trade into this doesn't mean that you're gonna flip lower. This can be a potential area of support. If this gets broken, then you should consider that it may have a deeper retracement, maybe into optimal trade entry, maybe continue lower. But if this mitigation block doesn't get broken, then it's still support, like we're seeing right now.
Okay.
ES looking like it wants to fill in its consequent encroachment of the opening range gap. YM irrelevant because plus we're almost at a 30% retracement of the current weekly range on NQ. This here, you don't want to see this it break this low. Why? This is context talking. Until we meet the next bullish target, that would be. Wait, have we already met it? Okay, we already met it, but oh well. We'll just say this high. Until we meet the next bullish target, which I realize now we've already met it, these relative equal highs. So technically this isn't bullish, but pretend for a moment it hasn't taken these highs, just for the learning. If we work within the suspension block, react off the mitigation block, and then this itself is technically like an area of mitigation because it's a low, high, high, low. So if you just break this down into its core market structure, this whole thing is mitigation. But where do you refine that? You go to the bodies, It shouldn't break this low because already done the work on the low end of the suspension block, inside the mitigation block, until it reaches the next liquidity pool. But obviously we have reached these relative highs. It can reverse there. I didn't realize when I was typing it out, but yeah. Now I'm gonna look like an idiot. You gotta believe me. No SMT, so it wouldn't be a really strong, fast move. Just gonna get a quick optimal trade entry measurement. Hi Eric, just connected. Looks like a good day for Silver Bullet. Uh, Honestly, it's a Friday. We've already delivered heavily down to the sell side. If you look here, uh, the daily low that we were talking about this morning in Discord, it's already traded all the way down there. Plus, it's already done a lot of work onto the upside. Now, it can potentially work lower again, but I would definitely lower my expectations of a lot of distribution because we've already worked all the way lower, we've worked all the way higher. If we're going to overlap all of that again on a Friday, I know it's prime time, but it seems less likely. I wouldn't be hugely confident in the silver bullet setup. Maybe, I'm not saying it's not going to fall, I'm not saying it's not going to happen, but I would just reserve my expectations if I was looking for that. If that makes sense. Okay, this is an intermediate term low, so if we're bullish, the most ideal scenario is to not take this out. The most ideal scenario. Now, it can and give tail soup to trade higher. If it displaces through, then I would just take off the chart, be content with what you've grabbed, because, we called from here to here, then from here to here to here. Sometimes you gotta know when to call it quits. SMT, that's a good entry for the Nasdaq because this is the distribution asset. It failed to take out the intermediate term low, and ES did take out the intermediate term low. So this will be the distribution asset. This is the one that's going to have the more pronounced move. $24,790. No. Maybe you mean no. I can't see that. Not yet. I mean, if we take out the highs, then I'm not saying like it's never going to hit today, but right now, no. Highly doubt it. Highly doubt it. Well, the main reason is fails to take out the intermediate term low, and ES does take out the intermediate term low. So what is it? It's a strong SMT. Plus we have buy side objectives, so we have all the reasons to go higher. To trade lower now before taking out the buy side. If we take out the buy side, then yeah. But we haven't done that yet. We still have a lot to work with on the buy side. So any sell side delivery before we take out these buy side objectives is a suspect sell side delivery move, and I would look to buy it up into these, not treat it like it's going to continue displacing lower into 24,790 all the way down here. Like, no way. Okay, took out this short-term high. This is what I want to see it give us. Beyond that, I don't care. These are all the big highs. But for it to work, yeah, these two highs. But this one will be contentment. Reclaimed suspension block from the 1 minute, so that's fractally. Oh, well, that's just perfection, isn't it? This is where bull flags do work. Out of pure coincidence. I like that it was a long wick. I don't really want to see that traded below now. If it does, it's just going to take a long time to get into this high. Like, it wouldn't be explosive. Whereas if we just leave this low alone, this very small 1017 wick low, and we just leave it, we're likely to just shoot up into this high and then call it a day. But if it takes it out, it's going to be a little bit more sluggish. We took it out. Sluggish. But we do have opening range gap, consequent encroachment level. Still looking at the 5 minute suspension block. This is a 1 minute inversion. So it's still fine to deliver, but it's probably going to be a bit slower than if we didn't take out that candle low. Because if we didn't take that candle low out, we could see this become a bullish order block very easily, and then it'd be enough to support us into this high. Okay, it wicks into this BISI a little bit. That's IO Fed. IO Fed. What is IO Fed? Institutional Influential Draw. Which is where high-frequency trading algorithms engage the marketplace inside that inefficiency with the premise that it should be trading higher into these relatively highs. Okay, now using this as an intermediate term low, and we'll see this trade above this diagonal candle's opening price, and then create a bullish order block. If not, it's just going to be very slow delivery into the high, but there's enough down here that it shouldn't take out this low. So it's no longer IO Fed and it's back to being a fair value. It's good that I left a long wick here. Let me move these levels. When you see a long wick like this, I say this every live stream, every review, everything I ever do, but It's very, very important. If you're bullish and you trade down into an array, a discount array, it's respect to the consequent encroachment, it's left a very long wick, the body got pulled all the way up to the high, the next candle following it, look where the wick is staying. You can eyeball this very easily. It's staying in the upper half of the previous wick. If I put an equilibrium level on, you see how it fails to take the consequent encroachment of this wick? That's strength. And that, combined with the idea that this is a very elongated wick, trades down into the key level inside of the PD array. Two PD arrays, suspension blocks, consequent encroachment, and the fair value gaps, consequent encroachment, are completely aligned. Trades down into it. We don't need to see it trade down into this now. That's starting to me that I'm low. And because the next candle following it creates this as a swing point, this wick does not trade into the lower half of this candle. That's strong. That's why you want to see it a little bit fast. Let's see. Well, now I look like an idiot. Generally, that is uh, it's a very important thing. It's very indicative of speed and strength when you see that. So don't be discouraged by seeing it one time wrong in a 1 minute chart. Thank you. It's like a bloopers moment. Yeah, it comes back to what we said earlier. Trading below this candle's low, it's just going to be sluggish until we can break this high. If we had been very uh, speedy in taking or staying above this candle's low and creating this as a bullish order block, it would have been much nicer. But now it's going to be sluggish. It's leaving long wicks, which is good. That's still the idea of what I said earlier. It still applies. But sluggish. A little bit sluggish. Lovely. Okay, let's break those relatively equal highs, and then we can end the stream. I feel like a lot of people made a good amount today. There we go. almost like I know what I'm doing. Almost. GG. Well played, yeah, well played. GG's. Okay, stream summary, we'll do a little summary. I think I've been doing these for the last few streams. So we initially looked at the NLog for bias from the 13th of October, but our objective was pre-market low. At the opening range, at the 9:30 opening bell, it trades up into the opening range a little bit. This is where we said to sell it into the pre-market low. It inverts the first presentation fair value gap and leaves this as breakaway gap, which we said would flip our bias. We did, and we said relatively good highs, pre-market high, these highs, and consequent encroachment of the opening range gap, and the 20% level of the TGIF. We've still got other levels that we can trade to, but I'm not really caring about those. And then all that's happened pretty perfectly. So GG's. GG's. Yeah. Enjoy your weekend. Weekly outlook Sunday as usual. The last one was very good. Hopefully you learned something. Hopefully you come away with something. I will be live streaming every day again next week. If I can't, then I'll let you know in advance. Thank you for watching and goodbye.